Thank you for watching the Entrepreneur Tax Training Series. This video is entitled Self-Employment Tax. To start, let's define what self-employment tax is. Self-employment tax is a Social Security and Medicare tax for self-employed individuals. Think about the last check you received as an employee. You had a certain amount of money withheld from your check for Social Security and Medicare, known as FICA taxes. What you may not know is that your employer also had to pay that same amount on the wages you received. When an individual is self-employed, they become responsible for paying both the employee and employer portions of these taxes on their earnings. Also, rather than having the tax withheld from multiple paychecks throughout the year, self-employment tax is taken as a lump sum on the individual's tax return in the spring. Those required to pay self-employment tax include sole proprietors, meaning those with no legal structure, independent contractors like commissioned sales reps or realtors, partners in a partnership, and members in an LLC, including single-member LLCs. It is important to note that passive income, such as the earnings of silent partners or income from investments like a rental property, is not subject to self-employment tax. Self-employment tax is calculated by taking 92.35% of the total net profit and multiplying it by the current self-employment tax rate. Traditionally, that rate is 15.3%. That rate is a combination of the 12.4% Social Security tax and the 2.9% Medicare tax. As you are probably aware, Washington passed a 2% reduction in Social Security taxes effective in 2011 and has since extended the cut into 2012. While the full duration of this 2% tax cut will be left to lawmakers, the current self-employment tax formula and the one that will be used on 2011 tax returns will reflect the reduction. This means that the current self-employment tax formula is net profit times 0.9235 times 0.133. For example, if you earn $10,000 in self-employment income in 2011, you will pay approximately $1,200 in self-employment tax. Likewise, if you earn $50,000, you will pay just over $6,100 in self-employment tax. In the event that a company has expenses greater than its revenues, a net loss, no self-employment tax is due. As you can see, self-employment tax is a hefty price to pay for business ownership. Remember that self-employment tax is paid on your company's net profit, meaning the amount you have left over after you have covered all of your expenses. Be sure to keep accurate records of your expenses to ensure you are not paying more taxes than necessary. Once your company has become profitable, you will also want to create a business entity that can further reduce this tax burden. Owners of S-elected entities, including S-corps and S-elected LLCs, are required to pay FICA taxes on a fair salary in place of self-employment tax on the company's net profit. Profitable companies should consult with a tax professional to see what entity is best for them. If you have any questions about this or any other related topic, learn more at www.msftaxes.com. Thanks for watching.